Last week was really a dollar story. We saw gold tumble after the better than expected employment data coming out of the US. We have Frank Holmes joining us this Monday. Frank, good to see you. Let's talk gold.
It's good to be here. And last week was incredible with the 10-year government bond. Had this massive surge in America, but also in Germany in the past 10 days has had a big surge, German bonds, on inflation coming back in the euro economy. So this wiped out $500 billion of global bonds.
And we're seeing gold prices recovering this Monday after gold fell to a 2.5-month low on Friday. Frank, what's your sentiment for the metal this week?
Well, I just think we're always just groping for a bottom that takes place in May, June, and sometimes late June, and sometimes it's late May. But sometime in this time period, we will find a bottom as we go into the second half. The big news is what's going to happen with wedding season in India, and there's some concern there's less wedding seasons, so maybe that will be a threat. Or real interest rates start to rise more rapidly. But I think this run in real interest rates in the U.S. is probably at its big move. And why do I say that's important for your listeners? 5 years ago, when gold hit 1900, the real interest rates were negative 3% for a 5-year government bond. Today, it's 160 basis points positive. So going from negative returning your money to a positive, gold declines. And I think that we're trying to find this sort of bottom in place.
Yes, 4 years ago. Can you believe that much time has passed since gold hit 1900?
Yes, sorry, coming back is 4 years ago when gold ran to 1900 in September of 2011, interest rates in the US were minus 3% for 5-year government bonds. Today, they are plus 160 basis points. That's almost a 5% swing, and that's why gold has come down. Now we're starting to see this big surge in the US dollar is impacting exports, and some great macroeconomists believe that the dollar is peaking and that these negative real interest rates will start to actually go to a number that is going to go from plus 160 basis points back to minus. If that happens, then gold will rally probably to $1,300 or $1,400.
Frank, let's get to our OT segment now. Opportunities and threats in the gold market. Starting with opportunities, the OECD released a report this morning noting that the U.S. economy may not rebound strongly from its first quarter contraction. Frank, are you bullish on the U.S. economy?
Well, there's lots of mixed signals. If you look at exports of high-quality American products, the durable goods index is a good factor. It's been down for 5 months, going to 6 months in a row. The PMIs are muted, but the global PMIs, in particular come out of Europe, seem to be stronger. But the U.S. are not as robust as they were this time last year.
All right, and on to threats now, Frank. Offline, you were saying that the biggest threat to gold this week could be PPI?
Yes, producer price index comes out Friday. And when I look at the agenda of the landscape, what's coming out that can move with the anticipation of inflation would be PPI numbers. Now, last week, employment numbers were so robust, that's what made the 10-year government bonds spike dramatically.
And I guess we'll wrap with your touchdown pass, which has to be PPI this week, right?
It's PPI. Focus on PPI and focus on inflation and what's taking place out of Europe relative to America.
Thanks so much, Frank. We'll see Frank next week live in San Antonio, where we will be covering the IPMI conference with lots of great interviews and speakers. But for now, we'll see you tomorrow.